Ladies and gentlemen, welcome back to the channel. I hope you guys are having a great night. This is a late video coming at you guys because we have some breaking news that is so substantial that I must make this video. China cuts rates on policy loans for first time since April 2020. Once we get into the chart of this, you will see just how dramatic this actually is. If we take a look at the first couple sentences of this article, or the first 2 or 3 paragraphs, it says China's central bank on Monday cut the borrowing cost of its medium-term loans for the first time since April 2020, defying market expectations to cushion any economic slowdown. The expectations, that's the only thing that matters in the stock market, is expectations of what is going to happen. Now, I know you're thinking to yourself, who the hell cares what is going on in China? Investors care what is going on in China. There is a possibility of this having a very negative impact to our markets, and I think it's a very high possibility, as China was the first country to get COVID, the first country to get rid of COVID and be in a recovery phase for over 6 months now, and to be cutting rates again. Investors are going to forecast something like this happening in American markets as well. Let's continue on. It says the People's Bank of China, PBOC, said it was lowering the interest rate on 700 billion yuan, 110.19 billion US dollars worth of 1-year medium-term lending facility, MLF loans, to some financial institutions by 10 basis points to 2.85% from 2.95% in previous operations. 34 out of 48 traders and analysts, or 70% or analysts, or 70% of all participants polled by Reuters last week, I can never say that, last week predicted no change to the MLF rates, although a rising number of market participants start to forecast a rate cut. If we take a look at this actual chart, this is an all-time chart. This is the max as far as it goes out. I believe the last 25 years. You guys can see what this rate was at before COVID, way up here at about 3.3%, dropped all the way down and stayed like that for 20 months. Now they are finally starting to drop these rates again, and usually if it's not a pandemic, the last time we've seen this was increases back to back, or decreases, cutting the rates back to back to back, like you've seen right here. 1, 2, 3, 4. So intervals of 2. So it's likely to actually happen again. And this is just showing market participants that the Chinese economy is actually slowing down. So this is not going to be good for our markets. It's good for our cause because it does help to dry up some liquidity and take some money out of the system that hedge funds need to service their margin calls. We're also getting another very interesting headline as well. The Chinese economy grew 8.1% in 2021 compared to a year ago. Fourth quarter GDP rose 4% from a year earlier, according to China's National Bureau of Statistics. Analysts polled by Reuters, that I can't say that word again, had expected China to report fourth quarter GDP growth of 3.6%. However, retail sales missed expectations, growing by 1.7% in December from a year ago. They had predicted a 3.7% increase, so they substantially missed right there as well. For the full year, China economists had expected an average of 8.4% growth in 2021, according to a financial data provider, Wind Information. So they actually did not beat in that aspect as well. So I do expect this next short week to get very volatile and potentially see some big swings in the markets as companies start to report earnings. That's going to be very, very important for our markets and the guidance that the banks, as well as these other companies, including Netflix, give for the full year of 2022. So that is going to be all for this quick video. I think this is very substantial because what happens in China affects the American markets as well, and vice versa. So that is going to be all for this video. Hit the like button for me and consider subscribing to the channel if you guys like these short videos. Love and appreciate you guys. Thank you for watching. I will see you in the next one.